Hi, and welcome to the 2020 Economic Depression and Recession channel. I'm your host, Tony. Thank you for joining me for this weekend edition, October 31st. Hope everyone is having a good Saturday and end of the month, Halloween, or whatever you want to call it, festivities, and be safe. Please be sure to subscribe to this channel for the latest financial news in the United States and around the world. Tonight, this evening, just want to talk briefly with you about the delay of the stimulus that we all have known has been delayed. First, they told us that the Democrats and Republicans got in. They first started off with a $5 trillion package that was shrunk down to $2 trillion, of which Nancy Pelosi and her team agreed on. Then that was even shrunk even further just now to $1 trillion. And as we come to the close, almost the last, 30, 60 days of this year, Washington, D.C. continues to delay the stimulus help, not just for individuals, but for small businesses that are closing daily in every city, township, state in this country. So once again, the Federal Reserve Bank is running out of ways to help the economy. They're running out of bullets here because the Federal Reserve Bank has relied on the economy's key support system, which is the stimulus, as Washington, D.C. senators continue to debate for more fiscal help. Moody economist Mr. Mark Zandi said they just don't have much room to maneuver with regard to monetary policy. And ladies and gentlemen, to tell you the truth, he's absolutely correct. Because you see, even if we got a second stimulus check, $1,200 is not going to stimulate the economy. The problem is that people are saving. They are bracing for impact. We are on the downward slope now. We've had 13 years of growth, artificial growth, mind you, quantitative easing growth since 2008, 2009. And now the check is due. The balance has come home. The chickens have come home to roost. And so there's not much room to maneuver because 2/3 of the U.S. economy, that's over 66%, is based on consumption. That means spending, but people can't spend because of the pandemic, because they have family. They're trying to meet family needs and personal needs and survival needs right now, meaning food, housing, bills, etc. So there is not much room to maneuver on the monetary policy side or the fiscal policy side because they can't raise taxes. Normally, in a booming economy, you would raise taxes and you would raise interest rates. Raise interest rates. That's what I meant to say. In a normal economy that's growing, quote unquote, you would raise interest rates so that people can earn money on their savings, and at the same time, the banks can make money lending out to us and etc. But we're not in a normal economy. We haven't been normal since 2008, and even arguably since 2001, we haven't been normal. But 2008 is the date we use because that's the last time we went into like a Great Recession. And so Fed Chairman Jerome Powell was really in a pickle here because he can continue to stimulate the economy by pumping money into the economy, but the money is not being spent. There's no money velocity. It does no good. You have just a piles of cash sitting there. And that's why I think we're heading toward a deflationary depression. And this is the worst type of depression you want to head towards because no matter how much money you pump into the economy, nobody's spending, everybody's hoarding cash. Cash is king. But at the same time, every assets prices are falling, but nobody can buy anything or sell anything because the economy is in a depressed state. Nobody has a job. We already have 60 million unemployed now, and that's growing. Last Thursday, we just had to report, or this Thursday, we just had to report another 750,000 unemployed. And so there's not much he can do. The Federal Central Bank, Reserve Bank, is running out of ways to help the U.S. economy. And folks, we haven't even gotten to the December 31st deadline, which is exactly 2 months away, or a month away, because we're going into November tomorrow, for the rent moratoriums and the eviction crisis. So how do you think this is going to solve? How do you think this is going to turn out? This cannot turn out any way but bad for the majority of Americans, besides the upper 1% of Americans who have all the money anyway. But they don't have much options here. And so Jerome Powell said in a speech to the National Association for Business Economics, he says that delaying more rescue funds could, quote, lead to a weak recovery, creating unnecessary hardship for households and businesses. He stressed that the bigger risk would be lowballing fiscal help, adding that the risk of overdoing it seems for now to be smaller. Well, let's take his words for face value. Though we can't take these politicians and what they say in the media for face value. But let's assume that Fed Chairman Jerome Powell and the Federal Central Reserve Bank want to increase the stimulus. Let's say they just blow the stimulus out and give us more than what we had anticipated, $2,000 or whatever. They just drop it directly into Americans' bank accounts. Like I said, that's not going to help because they want to induce inflation, but inflation has been low, at least as far as their estimates, and that's because of the velocity of money I mentioned earlier. We're heading toward a deflationary economy, meaning that the prices are going to be dropping, and dropping on houses, on retail, on other assets like houses, land, oil, gas. All that's going to be dropping, but what's going to be increasing is the prices in food and consumer staples, and that's only because we're going to have a supply shock, which you already experienced, and many of you already experienced when we first started in March, this pandemic thing, where you couldn't get any toilet paper, any canned goods, pasta, tuna, you couldn't get any auto parts at some of these stores, and you ran out of security supplies, meaning, your brass and all of that was out of stock, or still out of stock, really, but, so that's what's going to happen. We're going to have this split dichotomous economy, but we're going to have a deflationary period. And this is the same thing that happened in 1929. We had a bunch of mergers too. All of these companies you notice are merging. Either they're going out of business, the small businesses, or they're merging. And so I think we're going to have a decent shopping season, but you notice that there's not much people out there with shopping bags for Christmas. They're putting out the Christmas things in these outlets and these little malls, the malls that are open. They're putting out this little Christmas campaign, but it's not going to work. And January the 1st, we're going to feel the real pain because Congress is already telling us that you're not going to see any stimulus till next year, and they're trying to push. And so regardless of who wins this election coming up this week or next week, Tuesday, the Fed's only options that they can do right now is to purchase more bad junk bonds. Remember now, the repo market, the Fed had been injecting $20 billion daily into the repo market since last September 2019. That's what started this whole thing. Before the pandemic, before the coronavirus, before all this nonsense, there was a problem in the repo market, in the bank market, meaning the banks had trouble lending to each other because they didn't have the cash reserves on hand. Then the Fed steps in and they say, hey, you know what? You don't have to have the 20% reserve that we normally should keep on hand. You can just lend at will, but they still didn't have the liquidity on hand. That shows you just how bad things are, not just in America, but around the world, because everywhere, German central bank is lending money, Italy central bank, Greece central bank, they're all printing money that they don't have, but the United States leads the way with over $27 trillion in debt and over $10 trillion in unfunded liabilities and pensions that are adding up in derivatives. So government bond yields are at historic lows, and the Fed officials, bank officials themselves have expressed skepticism about the impact of the yield curve control. We know the yield curve has been severely inverted for the last year or two now, and that points to a Great Depression, ladies and gentlemen. Yeah, there's no doubt about it. We can try to I don't sugarcoat anything. This is the truth. So get ready now. Get prepared. We know that it's coming, and it's coming fast. It's much faster than I thought. I thought it would be, closer to 2025, but we're going to definitely have this depression in here before at the end of 2021, you'll see. But during 2021, you're going to see the transition, and they're getting ready for civil unrest now. They're getting the security in place. I mean, the government's giving everything in place now because they're going to break it to the people that after whatever happens with this stimulus and this economy, and this election, they're going to break it to the people that the United States of America is insolvent, that they're bankrupt basically, and they don't have the money to cover every single industry. So that means like the airline industry, they're going to have to reduce them down to maybe 2 or 3 airlines that the government's going to take over, and a kind of like a socialist hybrid merger type of government. That means in the retail, there's only going to be 2 or 3 big players, and we've all seen that. Who we all know who's going to survive that. Amazon is going to survive, and we know a few others. Walmart, maybe a Target. You may get something like that. Everybody else is going to be shut down. It's just the way it is now, because there's nothing that they can do to help the economy in the near term. Now, the Fed's biggest weapon they've already wasted, and that was they should have raised interest rates 10 years ago, and they did not, because they knew that if they raised interest rates just a little bit, this whole house of cards and fake money would have came crashing down on everybody. So they gave us 10 years to prepare, or 12 years to prepare, 13 years, and now it's time to pay the bills. We don't have anything to pay the bills with, and we can't borrow money from China anymore because they fell out with them over the trade deal. We can't borrow money from China, Russia, Saudi Arabia, and the Middle East don't want our money because they're trying to get off the dollar because they are mad because the United States are sanctioning Iran and sanctioning all these countries. And so we're pretty much on our own right now. And that's what, whether you want to blame it on the president or anything else, this is what has pretty much has led us up to this point in American history. And so it's very interesting. It's nothing to be too afraid of, but it's something to know that we're going to be going through hard times. I just don't see now the government said on Thursday they released its first third quarter GDP, and they said that apparently GDP grew over it grew up to 30%, but now they're saying that in fourth quarter 2021 and 2021 they will only see a 4% growth. But this could leave the U.S. short of pre-pandemic levels in this case. But the ultimate wild card, of course, is everybody saying is this pandemic. If the cases increasing, which they are in many states, we've been seeing that on MSNBC and all these news channels that the cases are increasing without no doubt. And so that's going to be not only the wild card, but that's going to shut down this economy even further to a depression. And so right now, the only thing keeping this stock market from the economy from dropping really is the Federal Reserve Bank buying all these junk bonds and keeping the rates low. But they can probably, one guy said here, he said that one economist said that Mr. Marustos, who's head of global bonds at Janus Henderson, he says that, quote, the Fed's on hold for at least 4 to 5 years, maybe more. That Fed put us in place between now and eternity. So he believes that the Fed can hold on to this fake economy for 4 or 5 years into 2024. I don't think so. By 2022, 2023, this economy is gone. We're in some type of major depression. A lot of stores are closed down. We might even be into a national lockdown. I believe that's coming too. So be prepared for that, ladies and gentlemen. We're at home now, a lot of us, and school, a lot of school kids at home. But be prepared for a national lockdown because this pandemic is not going away. We could see up to 1 million cases by the summer of next year. 1 million deaths, basically, by the summer of next year. We're already at 300,000 almost now, and it's just going to increase. So in order to prepare, start getting your supplies. Like I told you, food, water, medicine, antibiotics, those supplies you better get now because next year you're not going to be able to get them because all those things come from India, Thailand, China, and countries. They don't make those things over here. Remember when the masks are out, we couldn't even find N95 masks. Forget about that. You couldn't even find a paper mask on Amazon or Target or any of these Kohl's or any of these stores in America. So you try to get your supplies stacked up now while you can through the winter, while it's cold and dark, and while things are going to be happening in this country because we're going on a national lockdown. Probably when spring comes by next spring, as we head into April 2021, May 2021. We know the cases are going to increase, and so that's going to be a national lockdown. So get prepared because the Federal Reserve Bank is telling you right now they're out of bullets. They're running out of ways to help the economy. And this was on CNBC.com just this week. Wednesday, October 28th, it was published. And we totally agree here. I totally agree that they're out of bullets. And they're not going to break the news to us till after New Year's, January the 1st. And that's when people are going to realize that despite the stimulus, we are in a great recession, a great depression, really. And businesses are continuing to close. You've seen that. Let me know. Comment down below what you're seeing in your towns. I'm seeing business at a mall, or not even at a mall, just in the strip malls or outside in these suburbs, towns closing down, never to reopen. They're not opening regardless of pandemic or not. Barbershops closing. I'm seeing gyms closing. I'm seeing nail salons closing. I'm seeing commercial real estate buildings closing, wellness centers closing for good. And so let me know what you see below. Have a blessed weekend. God bless. Stay safe. And thank you for listening.